Welcome to the Runway, where we cover current events in crypto, Web3, and tech. It's Friday, February 16th. Let's take off. First up, Honduras watchdog bans institutions from trading crypto. Honduras' CNBS regulator has banned the Central American country's financial system from trading in cryptocurrency and similar for virtual assets. The National Banking and Securities Commission said a resolution dated from Monday, but made public on Friday, had immediate effect. It looks like they are citing risks of fraud and money laundering here, which seems to be the standard dog whistle coming from the administration here in the U.S. The resolution bans institutions under its supervision to maintain, invest, intermediate, or trade in cryptocurrencies, crypto assets, virtual currencies, tokens, or any similar virtual assets not issued or authorized by the central bank. Honduran law does not currently regulate crypto assets, though platforms trading in them do operate in the country. The watchdog noted that as many of these platforms are domiciled in multiple jurisdictions, Honduran law cannot control them, and they run the risk of lending themselves to activities of fraud, money laundering, and terrorist financing. Sounds like Elizabeth Warren wrote this press release here. The Honduran central bank has warned that it is not responsible for and cannot guarantee any such transaction. In March 2022, the central bank said it was studying the technical and legal viability of issuing its own digital currency, which would be regulated and recognized as legal tender. It has yet to announce a decision on this. Sounds like our worst nightmare here, more CBDCs. Honduras Prospera, a so-called model resort town on the Caribbean that operates as a zone of administrative, fiscal, and budgetary autonomy, ZEDE, had in April 22 announced its adoption of Bitcoin as legal tender within its borders. That's nice to see. It was not immediately clear how it would be affected by the new policy. Hopefully it won't be affected at all. These autonomous sort of economic zones are a great idea. These sandboxes, I know a lot of countries are doing this for crypto all over the world. I know we've talked about a couple of them. So definitely nice to see there. My thoughts on all this are that we're seeing countries experiment and do different things, right? So even within South America, we're seeing a wide variety of reactions here. We're seeing countries like El Salvador embrace everything. We're seeing countries like Paraguay sort of be in the middle. And we're seeing countries like Honduras who have special economic zones that might, make Bitcoin legal tender and utilize it. Their central bank and the political climate there might be sort of hostile, right? And then we have other countries like Venezuela and Argentina where, the citizens themselves have lost all faith in the government and they are taking matters into their own hands. Not sort of, they are taking matters into their own hands and they are using, stable coins. They're using Bitcoin. In Argentina, a lot of them are using stable coins, right? USDT, USDC, and in Venezuela, there are a lot more people using Bitcoin from what I've heard, but they're also using stables. And you're seeing experiments sort of play out in real time, and that's pretty cool. Let's move on to our next story here. A top official in the Terrorism and Financial Intelligence Office debunked Senator Elizabeth Warren's past claims that crypto is chiefly responsible for funding Middle East terrorist outfits. Senator Elizabeth's anti-crypto crusade suffered a serious blow during a House Financial Services Committee oversight hearing this week. Crypto industry insiders were buzzing following testimony from a top official in the Treasury Department's Terrorism and Financial Intelligence Office. Brian Nelson, the Undersecretary for Terrorism and Financial Intelligence, told the committee that terrorists' use of digital assets for funding purposes is not as prevalent as previous media reports suggested. His comments contradicted Warren's main argument for pushing legislation that could have a chilling effect on the future of crypto in the U.S. Terrorists still prefer, frankly, to use traditional products and services, Nelson said. A spokesman for Warren did not respond to a request for comment. Elizabeth would not respond to a request for comment when she's been thoroughly debunked. It does not seem like, following reality and the facts are, but I'm not surprised here. We've gone over the actual, a lot of this actual statistics and data that Chainalysis has produced, blockchains and sort of storing this data, and we can look at it, right? We can track the wallets. We can take a look and see where the funds are flowing to that. Terrorists might have been using that spigot for a very, very small percent of those funds. Further data actually showed that it was actually less than what they had anticipated. Here's my favorite story of the day. Pro-crypto lawyer John Deaton is weighing a possible bid. Senator Elizabeth Warren John Deaton is weighing a bid for the Massachusetts Republican Party's nomination for U.S. Senate. Warren is seeking a third term in office. Jim Conroy, a Massachusetts Republican political operative who said that Deaton is giving a possible run a serious look. Deaton is the founder and host of Crypto Law. Deaton has attacked the U.S. government's approach to crypto oversight. This is amazing to see. I'm glad we finally have somebody throwing their hat in the ring here. Hopefully he does complete that and throw his hat in the ring. I think hopefully the crypto industry, this candidate, whoever challenges Elizabeth Warren. Let's move on. Disney ticket fraud company applies for patent using blockchain to protect consumers and sales. People think they got a great deal on Orlando theme park tickets, only to find they've been scammed. You hear horror stories about people who come from out of town and show up at the gates with tickets that were purchased at a price too good to be true, get turned away, and ruin the start of their vacation, said Seth Kubersky, author of the Unofficial Guides. Ticket sales is the lifeblood of Disney parks, Disney World, Disneyland, all around the world. It's very important they maintain control of what tickets are sold, who's using them, and people aren't sharing annual passes, and that sort of thing. This is a very real use for blockchain technology to sort of verify provenance and authenticity. And I don't think that this is something that will just be used for Disney. I think this is something that should be used for all tickets, regardless of where you purchase them from. Places like Ticketmaster could use this technology. The same thing happens when you go to sporting events. People try to hustle and sell tickets on the street, and you have no idea if you're buying something that's real or not. Well, what if you could take that RFQ code or take that digital code and scan it yourself and verify the authenticity of that yourself? If you could actually be assured that this ticket is actually real, it's actually been provably linked to a blockchain, and you can query it and see, is this a real ticket? And you could correspond an NFT to it, and when you verify the NFT, you can see if it's actually real, which is very cool. Citi believes that the vision for digital native products will unlock new capabilities and operational benefits, paving the way for fully auditable and traceable transactions. U.S. banking giant Citigroup has released a comprehensive report detailing the successful integration of distributed ledger technology into the private market sector through fund tokenization on the Avalanche blockchain network. According to the report, DLT offers a significant opportunity to revamp capital market infrastructure, enabling innovative investment products and enhancing workflow efficiencies. It echoes the sentiment held by other big banks and some regulators regarding tokenization and its potential benefits. The report begins by tracing the historical evolution of financial markets from the early days of physical stock certificates to the electronic trading platforms of today. It emphasizes the gradual but inexorable shift towards digitization, a movement that has accelerated with the advent of blockchain and DLT. This term DLT just essentially means blockchain. They sort of created this other term that I guess is big bank approved or big bank friendly. This historical perspective is crucial for understanding the significance of tokenization as not just another incremental change, but a potential paradigm shift in how assets are issued, traded, and managed. So let's unpack this a little bit. Right now, the current status quo is in a lot of ways very inefficient. If you want to sort of move ownership of assets and you want to do it quickly, if you want to create liquidity, it's much harder. When you put these things on a blockchain and provide transparency, right? So anybody can sort of look at it. You can see how many owners of this asset, how many shares of this asset exist. Can you own a partial share of this asset? This is very important for securitized assets like properties, right? What if instead of having one investor do a apartment complex, what if you could take, 5,000 investors or 10,000 or 20,000 investors and let them all own a piece of that property and the cash flow that it creates, right? Now, there's still legal hurdles. There's still liability and jurisdictional issues with a lot of this stuff, but these things can be solved with enough due diligence and enough research and enough thoughtful legislation. You can solve those aspects and you can give the best of sort of this idea of tokenization to consumers. This will unlock an unbelievable amount of liquidity that is currently behind all these walled gates and gardens and also run and done very, very inefficiently. But when you can sort of digitize this ownership and put it on a blockchain and prove the actual ownership slice of everybody and divide those slices into small pieces, the sky is the limit. Let's move on. Things get strange when AI starts training itself. What happens if AI becomes even less intelligible? This was a pretty long article. I use this tool that I've been talking to you guys about called Perplexity, which is just a little extension up there. And all I do is I go up there once a day on a story to kind of show you guys how I'm utilizing AI into my workflow. And I'll just say, give me 5 easy and short bullet points about the main ideas of this article. And then I query it, and it uses GPT-4 in the background, and it just gives me, a couple bullet points. And it says, AI development stagnation and the shift to self-learning, the rapid advancement of artificial intelligence exemplified by models like ChatGPT has hit a bottleneck due to the exhaustion of available training data and the high costs of human evaluators. This has led to a new focus on machines training machines, a method that has shown promise in improving AI capabilities through self-improvement techniques. So a lot of model training is done by what they call RHLF, which is reinforced human learning feedback. And this process takes a lot of time, it takes a lot of manpower, and it's a very slow grind. So the idea of this is, can we train sort of these smaller models that can all sort of act as almost humans, and each model might have a certain idea or thing it's looking for to help train larger models? The potential and risks of recursive self-improvement. The concept of AI models training subsequent generations, example, GPT-5 teaching GPT-6, raises both excitement and concern. While it could lead to significant advancements, there's fear it might result in AI surpassing human intelligence with unpredictable consequences. This idea of recursive self-improvement has been a topic of discussion for years, with some viewing it as a path to superintelligence. Despite this potential benefit, self-learning AI faces significant hurdles. These include the risk of amplifying existing flaws in AI models, such as biases and inaccuracies, and the phenomenon of model collapse, where the AI's performance degrades over time. Researchers are cautiously using small amounts of synthetic data and human oversight to mitigate these risks. So I think it's important to be able to utilize this as a tool, but I wouldn't just let it go, full Terminator mode and use it to train everything, right? You still have to have human touch in that loop, I think, and that's very important. That the main worry is biases and inaccuracies, because we still have that problem right now with a lot of the public models that everybody uses. There's a lot of biases and, sort of propaganda built into those models by potentially the humans that are based in San Francisco training those things, right? A lot of them are based there. So a lot of that bias is already injected, right? Economic and practical implications. Self-learning AI offers a more cost-effective and efficient method of improving AI models compared to traditional human-led training. This is very true. It's hard to argue with that. This approach could significantly reduce the resources needed for AI development, making it an attractive option for companies. However, the technology is still in its early stages, and its full potential and limitations are yet to be fully understood. The advancement of self-learning AI could lead to models that operate in ways humans find difficult to comprehend, potentially leading to breakthroughs that are beyond our current understanding. This raises philosophical questions about the nature of intelligence and the relationship between human and machine learning. The development of AI that can teach itself, and possibly us, marks a significant shift in our understanding of technology and its capabilities. So I think it's important that humans really continue to stay in this loop. The way these general pre-trained transformers still not actually fully understood by a lot of scientists. So I think it's important that we try to understand what we're doing here, right? Don't just press go and take yourself away. We need to still understand at a deep level sort of what's happening here and how the AI is working and how it's operating and how it's being trained. So I think with guidance and being wise about this, I think this could be a useful tool. But it is something to pay attention to as newer and newer models continue to come out. This is one of my favorites, I guess. The Elizabeth Warren getting a political opponent for her election is probably my favorite. But here is an AI image generated on an actual peer-reviewed article that got posted. They used an AI image to generate this rat with a giant penis. So here this rat is, and you can see a lot of the words they use probably DALL-E or Midjourney, and the AI is not very good at simulating words when it's doing images. So you can see a lot of this stuff is misspelled. There's a lot of errors here in this diagram, and somehow we gave this rat a giant penis. And it called it a dick, but with DCK. It's unclear how such egregiously bad images made it through peer review. Scientists aghast at bizarre AI rat with huge genitals in peer-reviewed article. Appall and scorn ripped through scientists' social media networks Thursday as several egregiously bad AI-generated figures circulated from a peer-reviewed article recently published in a reputable journal. Those figures, which the authors acknowledge in the article's text were made by Midjourney, are all uninterpretable. They contain gibberish text, and most strikingly, one includes an image of a rat with grotesquely large and bizarre genitals, as well as a text label of dick, or DCK. They also had a couple more here. So even with peer-reviewed stuff, even with scientists putting out information, again, these are just tools, right? And if you don't monitor the use of the tool, if you use a hammer when you actually need a screwdriver, it's not gonna work out for you, right? So, if you're using this as a thumbnail like we do for our, we use Midjourney and DALL-E and Stable Diffusion or whatever. We use these tools when our media department makes a thumbnail for the podcast video, right, or whatever. We'll say, hey, don't use words because you guys usually screw them up. So we will use that as that tool. But when you're doing a peer-reviewed scientific research, you want your charts and diagrams to be accurate. And I've noticed this a lot all over the internet with tons of articles that they throw somebody's name on it, and I read the article, and I'm not an AI, but I can tell you from looking at it that it's written with ChatGPT, and they just said, hey, write me an article about this, and then the AI just with no guidance, if you just give it that, it's just going to spit out the lowest common denominator bullshit where it just repeats the same thing over and over and adds a couple fancy words in, right? It's still not fantastic. So this is just kind of an example of that. And probably some of the biggest news over the past couple days, OpenAI introduces Sora, its text-to-video AI model. OpenAI's latest model takes text prompts and turns them into complex scenes with multiple characters, specific types of motion, and more. The AI company says Sora can create realistic and imaginative scenes from text instructions. The text-to-video model allows users to create photorealistic videos up to a minute long, all based on prompts they've written. Sora is capable of creating complex scenes with multiple characters, specific types of motion, accurate details of the subject, and background. According to OpenAI's introductory blog post, the company also notes that the model can understand how objects exist in the physical world, as well as accurately interpret prompts and generate compelling characters that express vibrant emotions. There have already been, a couple text to video models that exist, some open source ones. It looks like what OpenAI has done here is very impressive. I've had issues in the past with using them personally. It was still really cool to see, and you could see the potential there, but I think we've really, with this new model Sora, it's quite impressive. And the videos they've been able to generate, I've seen very limited flaws with them, and I think it's probably one of the better models I've seen so far that's text to video. Let's go to some spicy Twitter takes. Jack Mallers. This was Jack Mallers with Dave Portnoy. Can't say we didn't try. Only thing worse than fucking yourself on Bitcoin is not unfucking yourself on Bitcoin. Friends don't let friends perpetually fuck themselves on Bitcoin. I won't give up. You're a winner, king of the internet, beasting survivor. It's not too late, Stool Presidente. So cool little clip to watch. It seems like Dave Portnoy he's not quite there yet. He hasn't done the hours of work required to sort of really go down the rabbit hole and understand, what Bitcoin is. They kind of talk about the first time that Dave reached out to Jack to kind of talk to him and, just watch this kind of exchange.
It's probably the most exciting innovation technically of my life, and I get to help the world. And you go, that's bullshit. I hate when Bitcoiners do that. You don't want to help shit. You just want to make money. And I'm sitting here like, fuck you. I can't help the world.
You were also like, yeah, making money is the thing. That is one of my tenets.
So I think that Jack missed his opportunity there. He could have said, he could have kind of spun it around back on Dave and sort of said, ask Dave, what is money, right? That's like the first question. And you sort of go down this rabbit hole. And I think for anybody that's interested, maybe whoever's listening to this might not know much about Bitcoin or might want to learn more. The first question that you want to ask is, what is money? Have you ever actually thought about that? Have you ever gone down that rabbit hole? Have you studied money throughout history? Have you looked into it, right? Have you really thought about different civilizations and different monies that they used throughout the millennia, right? So that is the question. And that would have been really the pitch there to sort of make him think a little bit deeper, right? And Bitcoin is a topic that if you really want to, it's kind of like this beautiful thing that will, if you look at it from different angles, it'll show you all these like little ideas and little concepts and a little bit of game theory and a little bit of computer science and a little bit of the history of money and game theoretical problems. It'll show you all these different sides. And in order to really sort of reveal it all, you do have to spend, you have to spend some time. You have to put in 2, 4, 6, 8, 10, 24 hours to really of actively learning and listening to learn, the significance. Dennis Porter, breaking pro-Bitcoin attorney, looks to unseat Senator Warren. So hopefully a lot of capital will flow in this direction towards this candidate to take her out. Next up, Brian Armstrong. And full disclosure, I am a Coinbase owner. I own the stock. So this is a sort of recap of what Brian said today. A few thoughts on our Q4 earnings yesterday. 2023 was a great year for Coinbase and we're in a strong financial position. We cut costs by 45% year over year and shipped products faster with a leaner team, driving $95 million of positive net income for 2023, $964 million in positive adjusted EBITDA, and total revenue of $3.1 billion. We launched the Coinbase International Exchange derivatives products, the Layer 2 base, which is helping blockchain scale, and played a key role in the Bitcoin ETF approvals as the custodian for 8 of 11 ETF issuers. TradFi is adopting crypto, and this is great for Coinbase. Bitcoin ETFs are now the second largest commodity ETFs in the US behind gold, and we custody around 90% of the $37 billion in Bitcoin ETF assets. We've seen net inflows across our retail and institutional products since the ETFs launched, and i.e. no cannibalization. In 2024, we'll focus on growing trading fee revenue with international expansion and derivatives. We'll also focus on driving utility in crypto with payments. For instance, you can now send USDC instantly for free on Base, and by developing Coinbase Wallet into an on-chain super app. Finally, we'll keep driving regulatory clarity for crypto via the courts. StandWithCrypto.org, super PAC contributions, and encouraging legislation in DC. We're in a strong financial position. Our long-term focus on compliance has proved to be right versus competition, and we're well positioned to help accelerate crypto adoption, updating the global financial system. You can mint coin earnings. You can mint the coin earnings NFT in this post here. They made an NFT of sort of the year and kind of all of these, what they've accomplished in this year. Kind of cool. Kind of an interesting idea, right? So I really love what he has to say here. I think he's hitting a lot of the nails in the head. The only thing that that I will say here, you know, we're in a strong, our long-term focus on compliance has proved to be right versus competition. I mean, the SEC is coming after you and suing you and attacking you. I mean, have they really been rewarded? Have you really been rewarded for focusing on compliance? I mean, I would argue that you haven't been. You've almost been attacked even harder, which is it's disgusting to even think about, right? You've been trying to do things the right way. You've been trying to educate and support the industry and do things right, you know, not commit fraud, not cut corners. And you know, I'm sure there was a huge cost of capital, a huge expense that you guys sort of bore with that. But has it really been the right thing versus competition when what you've gotten back from the government is just lawsuits, attacking, suing? It's almost a slap in the face, right? You know, we kind of expect this whole, you know, public-private sector to work together in a lot of ways, but it just seems like that's not the case, right? It seems like it's been very antagonistic even when you've been trying to do things the right way. So I'll just leave with that sort of thought there. And then the other critique I would have here is that Coinbase has $5.7 billion of liquidity on their balance sheet. 90% of it is in bonds, money market funds, or cash. Why does the world's largest crypto exchange not invest in Bitcoin at all? That's a great question, Julian. And I think that we need an answer here. You know, why is there no Bitcoin on the balance sheet? I think, you know, I'm not saying you have to go like Michael Saylor and put all of your reserves almost in Bitcoin, right? Tens of billions of dollars worth, but why not 30%? Why not 40%? Why not 20%? You know, so as Bitcoin, you know, on your sheet with reserves, you know, put your money where your mouth is. I think that's Julian raises a good point here. Next up, Paul Grewal.eth, who is the lawyer for Coinbase and their legal counsel. And he says here, we need cameras in America's courtrooms now. No branch of government should be permitted to operate outside of broad public view. And I totally agree with this, right? Part of the government is that it's a public thing, right? They do not deserve privacy. If you watch these videos about, you know, these people going in with cameras into these, you know, public places, and all of these people trying to get them to turn off the camera and do all this stuff, it's like, no, you work for the public. You do not have, you know, privacy and private protections as a public servant, right? You are a public servant. So I totally agree that there should be cameras in courtrooms. People should have access, right? When there's voting and counting and all these things, you know, we shouldn't be holding signs and barring the windows, right? People should be able to observe whatever it may be, right? Whatever story, right? There should be a light shined. You know, people should be able to publicly verify election results. People should be able to, you know, publicly see what's happening in the judicial system and courts. People should be able to see what's publicly happening, you know, behind all these closed doors. That's the difference between being a public citizen and being a private citizen, As a private citizen, you have a right to privacy. Or you should have a right to privacy. That's being violated on multiple levels. But as a public servant, you should not really have a right to privacy, right? What you're doing for the public, for the government, that really should be public. And now we've gotten to this thing where all this stuff is just behind closed doors. It's private, millions of dollars flowing all over the place. Who knows where all this money is going, right? Money's going to Ukraine, money's going to this country, it's going to that country, it's being shuttled through nonprofits, and now it's James O'Keefe's blowing the whistle on that. They're using public taxpayer money to sort of help operate these illegal immigration facilities in Mexico and all over the place, right? I mean, what is going on, right? There shouldn't be all this privacy. What's happening with the government doing stuff behind closed doors? I mean, I think there should be some expectation that the public can actually know what the hell's going on, right? I get that, in some extreme circumstances, right? If it's for the security of something that's going to happen, right? To protect. We've gotten to the point where there's so much stuff that's so secret that, they use it as an excuse that, oh, this is for your protection. And that's gotten out of control, right? So with the Patriot Act and all these things, the spying, the violations of the Constitution, is just out of control, right? There needs to be a reckoning. And I think we've gotten so far this way that we need to come back and really, focus on the Fourth Amendment and get back to where we need to be as a nation. And part of the substance of why this nation was founded and some of its core principles, right? Hunter Horsley spoke with a large Bitcoin miner recently. They made a great point I found compelling. Even if Bitcoin plays a productive role on power grids and uses mostly renewables or even stranded power, many who believe Bitcoin is worthless just aren't going to be convinced. Instead, the more salient point might be that power should be neutral. Regulators shouldn't selectively decide that certain programs and computers aren't allowed to buy and use electricity. The point stuck with me, and I completely agree with this assessment. I think that we should still actively try to convince people why Bitcoin is not worthless and why having a apolitical, neutral money that anybody can use without permission is important for the world and for billions of people who live under authoritarian regimes or who can't trust their central bank, and their central bank is hyperinflating their currency and stealing their wealth that they've saved their whole life for, or live in unstable political regimes, are under attack and need to flee with their life savings, right? Bitcoin serves a purpose for all of those things. And I think we should continue to explain that to people. That being said, this idea that power should be neutral, I mean, I have no idea why this is even controversial and what these people are thinking, because when you start to abuse this power, and this is exactly like Choke Point 1.0 and Choke Point 2.0, where under the Obama administration, they were targeting companies that they disagreed with, sort of on the back door. Instead of actively banning them, they were putting pressure on banks and entities not to bank these companies. This was deemed largely unconstitutional. If they do the same thing with energy providers and energy companies, that is also unconstitutional. We should not be in the business of, the government should not be involved with telling the private sector what they can buy energy and use it for, right? As long as it's not illegal, as long as it's not hurting someone, as long as it's not, violating the law that Congress has set out, the executive branch should not be taking actions behind the scenes to violate the Constitution. Yet we've seen a constant stream of that happening. And the same thing is sort of happening now. Fourth Amendment rights are being violated with this EIA that's been sent out to targeting Bitcoin miners, declaring that it's an emergency. It's always an emergency, and to keep you safe, when that's the excuse to violate people's rights. And this is another example of that, right? And then all of a sudden, you better believe that they're coming next for data centers, right? For Microsoft and for these other companies that are, whoever it may be, they are going to want to now regulate that. They are going to want to control who's allowed to use energy, which computers are allowed, right? We've seen this in China with the Bitcoin mining ban. We should not see anything like this in the United States. The free market should determine the optimal uses of energy. And customers that are willing to pay should be able to pay for whatever it is, right? You can take this even further down the line, right? Next, you're not going to be told that you can use your washer or your dryer, right? I mean, this is a slippery slope when the government is telling people they can't or can't use electricity for certain things. Absolutely, power should be neutral. It's like water. What if I told you you're not allowed to drink from the public grid? You're not allowed to have water because you work for a porn company or you work for whoever, right? So this is a very slippery slope. And the free market should determine what's going on here, not shady executive branch officials behind the scenes. another Paul Grewal post here. This was very interesting, and it just kind of goes over the SEC's sort of unethical behavior. U.S. senators question whether Chair Gary Gensler's SEC Gov has botched other enforcement actions after its debt box missteps were revealed. So Paul Grewal kind of takes us through a little timeline here of what exactly happened. These senators are even more right than they know. After @SEC Gov secured a TRO against Debtbox, it ordered Coinbase to freeze assets or risk sanctions ourselves. We now know that because the TRO was tainted by SEC misrepresentations, so too was this order. So I'm going to use Perplexity again here, and I'm going to type in, what is, it's kind of like just querying GPT-4 in your browser, right? So it's just a little window that pops up. You can't see it on the screen, but it's just a little small window that pops up as an extension. You just click on it and you put, what is a TRO in legal terms? Question mark. Let's see what it says. Using GPT-4, it says a temporary restraining order, TRO, is a legal measure used to prevent a party from taking certain actions for a limited period of time until a court can decide on issuing a more permanent order, such as a preliminary injunction. TROs serve as a short-term injunction in various legal contexts, including civil litigation and family law, to preserve the status quo and prevent irreparable harm. They're issued by a judge and can be granted without notice to the opposing party if the applicant demonstrates immediate and irreparable injury, loss, or damage. In federal courts, TROs are governed by Rule 65 of the Federal Rules of Civil Procedure, which outlines the conditions under which they can be issued, including the necessity for immediate action and the potential for irreparable harm. TROs are commonly used in cases involving domestic violence, stalking, sexual violence, intellectual property disputes, and to maintain financial stability during divorce proceedings. The duration of a TRO is typically limited, often expiring after 14 days unless extended by the court or consented to by the parties involved. Basically, what they did was they used fake evidence, they fabricated, and then to get this TRO from the courts to freeze funds or do whatever. After all this came to light, what Paul is saying here in the second section, he says, but rather than immediately pulling its order after admitting that it deceived the court, the SEC sat silently. So rather than continue this injustice, we then told the SEC we wouldn't comply further unless they explained why we should. But we were given no explanation at all. More time passed and only more silence followed. We have now righted that wrong by unfreezing the assets. Dismissal without prejudice and an hour or two of training is hardly a sufficient remedy here. If this can happen in a federal case supervised by a federal district judge, just imagine what else is happening outside of court oversight until they are made to stop. Enough is enough. I could not agree more here with this analysis. There needs to be repercussions, right? The public sort of servants and people that are doing these things, there has to be some repercussions for abusing their power. And I think that needs to be instituted, and we have to demand accountability here, right? There's just, if you expect the private sector to be fully accountable, right, the public sector should be even more accountable. The public government and the public entities should be even more accountable than what they expect from the private citizens in the private sector, right? You should be absolutely be held accountable, and there should be some accountability here for this gross negligent behavior. I think the attorneys that lied in the Debtbox case, or any case for that matter, should face serious consequences, if not disbarment. At the very least, do not hire them when they leave the SEC. It's an interesting take there. Breaking, and this is something we spoke about the other day, and let's just recap it here. Just announced Ledger Live users can now trade directly in-app on Coinbase with the benefits of their huge liquidity. Staking, swapping, buying, selling, all switching to Coinbase within Ledger Live. Soon there will be no need to leave Ledger Live. Big play here. Most large holders in the US use Ledger and Coinbase. This integration level introduces more trust to both brands. I agree with the assessment here. I think this is an optional thing, right? So nobody has to do this. But if you want to, it'll make your user experience better. And I think this is just one of the first steps of things we're starting to see. There's all these pieces, and we're sort of in this very early phase of the S-curve of adoption of these things. And as time goes on, things are going to be made easier and easier and easier. And I think in hindsight, this is going to be one of those things that we look back at in 5, 6, 7, 8, 9, 10 years and say, oh, this was that moment that sort of made things a little bit easier, where we can see how the future is going to develop, where the average person can easily now just buy a ledger and sort of use Coinbase right within that Ledger Live experience. Here's Pomp. Bitcoin is presenting a test case to see who paid attention in Economics 101 class. Demand is significantly outpacing supply. The network can't create more Bitcoin to satisfy demand, so price has to go up. I enjoyed talking with CV Payne about this in our segment. It's just math. Econ 101. right? So for anybody who's anybody you know who's a no coiner or who doesn't understand Bitcoin or who's like, oh, this is too complicated, I can't understand it, this is probably the most salient and easiest thing to explain, right? There's only ever going to be 21 million Bitcoin. Most of them have already been issued as the inflation rate, and they're already in sort of in existence per se. There will never be more. Whereas you have fiat currencies where the government or whoever is constantly printing and creating more of those currency units, right? So over time, those are two fundamentally different propositions. This is simply math, right? People want to save their earnings. They want to store their wealth somewhere. It's going to be in an asset that cannot be debased. And this is what is being described here in this post. Dennis Porter, this Bitcoin bill had bipartisan support in committee. Breaking, the state of Missouri passes a bill out of committee to protect your fundamental right to buy, self-custody, and mine Bitcoin. I love this. Love to see it. Love to see the bipartisan support. We talked about this previously. The Satoshi Action Fund will give them a follow. This bill and this House Bill number 2107, this is simply saying, don't discriminate against us. Don't attack us. Just let us do our thing. Let us be a free market thing. Let the companies that are operating this space operate according to free market principles. So I'm not sure what could even be any controversial about this at all. It says, hey, treat us like any other business. We don't want, subsidies and unfair treatment. We simply want to be treated like any other business. I think this is good. Next up, Alex Gladstein. Banks and governments and corporations will eventually do whatever possible to acquire Bitcoin, even if doing so ultimately reduces their power. Satoshi's incentive design was something else. So yes, I couldn't agree more. Satoshi take all these beautiful principles, and the game theory behind Bitcoin is so beautiful and so well thought out. This is just one layer of Bitcoin's brilliance. Here, what he's commenting on is powerful interest groups are pushing the Securities and Exchange Commission to tweak accounting guidance that makes it more expensive for U.S. banks to hold digital assets for their customers. The regulator is already facing pressure from both Democrats and Republicans in Congress to repeal the guidance. The Trade Group Coalition, which includes the Bank Policy Institute, the American Bankers Association, the Securities Industry and Financial Markets Association, and Financial Services Forum, issued a letter to the SEC on Wednesday seeking certain changes. So I believe I want to say this was like something called 201 or something like that, where the SEC is almost creating laws that they probably constitutionally can't even create. But I guess it's just like they call it guidance, and it just makes it it's almost like a rug pull on any honest participant being able to actually engage in custody of any digital assets. And it makes it very, very, very difficult. It's just another underhanded sort of attack on the industry. Next up, we're going to look at Sora, the new AI model that OpenAI released. And here's a interesting little video. Let's take a watch it of just sort of the prompt. The text prompt was historical footage of California during the gold rush. So let's just give it a quick little view. You can just see none of this is real. This is all simply simulated and generated and created simply from a text prompt. I mean, that is just fascinating. It's only been 5 hours since OpenAI announced Sora, and people are going crazy over it. Here are 10 wild examples you don't want to miss. Snow dogs. This is tweets from yesterday. So you can just sort of see dogs playing in the snow here. Here is a close-up shot of a Victoria crowned pigeon and two pirate ships battling each other as they sail inside a cup of coffee. A snowy Tokyo city. That's pretty cool. Italian pup. And here is the one we just looked at, the historical footage of California during the gold rush. A small dwarf who is raking the Zen garden and creating patterns in the sand. Amalfi Coast, so you guys can see the potential implications of how powerful this technology is. And finally for the day, I ran all of Sora prompts through Midjourney. Interesting how similar some are, side by sides against vids. An extreme close-up of a gray-haired man with a beard in his 60s. He is deep in thought, pondering the history of the universe as he sits at a cafe in Paris. His eyes focus on people off-screen as they walk as he sits mostly motionless. He is dressed in a wool suit coat. So you can see that all these models are being trained on all of the data that is the open internet, right? They're getting trained on all this data and what's publicly available. This is illustrating is that you've got different models, and although they may be different, they're sort of converging to the same sort of outputs when you feed a prompt in, whether it's a text to video or whether it's just a text model or an image model, right? A text to image model. You're sort of seeing something here that is sort of going to present a problem because all of these different companies that are training this data and training the models, they're all going to They sort of converge on similar results. And this is potentially problematic, right? So, but who does this benefit? In my opinion, this benefits those who have unique and sort of proprietary data that they can train their models on that is not available to the open internet to train on, right? Here's another one, a movie trailer, but this shows the same guy, and it's very, very similar what's created here. You can kind of see, very fascinating. So this one I thought was kind of crazy. They put this sort of prompt here. A grandmother with neatly combed gray hair stands behind a colorful birthday cake with numerous candles at a wood dining table. Room table. Expression is one of pure joy and happiness. With a happy glow in her eye, she leans forward and blows out the candles with a gentle puff. And you can see that it almost even put the same shirt on her. And she looks almost exactly the same with two different models, right? And these models were trained on the open internet of data. So kind of fascinating to see the convergence here of how when you're using the same data, how these models are sort of, even though one's a text to image and one's a text to video, they sort of converging on very similar sort of results. All right, guys, that's going to do it for today. Hope you guys have a great weekend. So stay safe, stay blessed, never stop learning, keep an open mind. Thanks for listening.